Warren Buffett just said something huge at the 2025 Berkshire Hathaway annual meeting, something every serious investor needs to hear. In one of the Q&A segments, Buffett dropped this gem. We made a great deal of money because we were willing to act faster than anyone else. Now that's not just some throwaway line, that's a mindset shift. And in this video, we're breaking it all down, where he breaks down one of his most essential investing principles: patience. But here's the twist. Buffett, the king of buy and hold, reveals a moment where acting fast and breaking that very rule made him a fortune. First, I'm going to show you the exact clip from CNBC where Buffett shares this moment of wisdom. Then, I'll dive into my personal reaction, what I took from it, and how it changes the way I look at investing. And stick around, because right after that, I'm giving you an in-depth analysis of the best Buffett-backed stock you can buy right now, one that could make a massive difference in your portfolio just a few years from today. If you're only going to watch one video today, this is it. Make sure to watch till the end, because I'm going deep on this. Smash that like button. Let's hit 1,000 likes on this one. Share the video with a friend who's into investing, and drop your thoughts in the comments. I read everyone. And of course, subscribe to the channel so you never miss another powerful breakdown like this. Alright, let's roll the clip and hear what the Oracle of Omaha has to say.
Hi, Mr. Buffett. My name is Daniel, and I'm from Tenafly, New Jersey. First of all, I just want to say how grateful I am for getting the opportunity to ask you a question. When it comes to your principles of investing, you often talk about how important it is to be patient. Has there ever been a situation in your investing career where breaking that principle and acting fast has benefited you? Thank you.
Well, that's a good question, and there are times when you have to act fast. In fact, we made a great deal of money because we're willing to act faster than anybody around. Jessica Toombs I think she's the stepdaughter or step-granddaughter of Ben Rosner, a manager of ours. And in 1966, I got a call from a fellow named 𝗗𝗟 in New York, and he said, I represent Mrs. Annenberg. And there were actually 9 Annenberg sisters, I believe, before Laura Annenberg came along as the son. But he said, we have a business we'd like to sell you. So I called Charlie up, and I got a few details, and it sounded very interesting. And Charlie and I went back to the office of Will 𝗗𝗨𝗧 in New York, who was a marvelous guy. Never met him since, but he was handling things for Mrs. A. Simon, but her name was Annenberg, and her husband had been the partner of Ben Rosner, but he had died, and Ben got kind of tense about working with her, and so he offered us this business at a bargain price. He offered us a business for $6 million. It had $2 million of cash. It had a $2 million piece of property in a 900 block of what's the key street in Philadelphia down there, Market Street, and it was making $2 million a year pre-tax, and the price was $6 million. And Charlie and I went back to this place, and Ben Rosner was there, and he just was upset about doing business with his partner's widow. She was extremely wealthy, and he wasn't enjoying it. He was very nervous about selling it, and he said to me and Charlie, he said, I'll run this business for you until December 31st, and then I'm out of here. And I got Charlie, we went out in the hallway, and I said, if this guy quits at the end of the year, you can throw away every book on psychology you've ever read. And so that began we bought the company and had a great relationship. And did I know that morning when I got a phone call from Will 𝗗𝗨𝗧 that did his background about it? I've had a couple of times, and that was one of them, where people in the East felt that they had a stereotype in their mind of what people from the Midwest were like. And Ben had been married. His first marriage was to a woman from Iowa, and he just figured that anybody from the Midwest was okay. And the trick when you get in a business with somebody, or get in a room with somebody like that, and they want to sell you something for $6 million that's got $2 million of cash and a couple million of real estate and is making $2 million a year, you don't want to be patient then. You want to be patient and waiting to get the occasional call. My phone will ring sometime, with something that, wakes me up. I may be sleeping in there or something, but you just never know when it'll happen, and that's what makes it fun. I mean, so patience. It's a combination of patience and a willingness to do something that afternoon if it comes to you. You don't want to be patient about acting on deals that make sense, and you don't want to be very patient with people that are talking to you about things that will never happen. So it's not a constant asset. It's not a constant liability to be patient. Greg, you.
Well, Warren, I was going to add, as you're being patient, I happen to know, and I think that goes for our Ajit also and all our managers, very patient when we're looking at opportunities. And as you touched on, we want to act quickly. But while we're being patient, never underestimate the amount of reading and work that's being done to be prepared to act quickly. Because we do know, be it equities, but I would include a variety of private companies that when the opportunity presents itself, we're ready to act. And that's a large part of being patient, is using it to be prepared.
Yeah, and of course it doesn't come in anything like an even flow. I mean, it's the most uneven sort of activity you could get into. And the main thing you have to do is you have to be willing to hang up after 5 seconds, and you have to be willing to say yes after 5 seconds. And
absolutely.
And you can't be filled with self-doubt in the business. You just forget it. It isn't going to work. Go into some other activity. But you also, one of the great pleasures, it is the great pleasure actually in this business, is having people trust you. And that's really why work at 90 when you've got more money than anybody could count. If they started today and having machines that are helping them and everything else, it means nothing in terms of how you're going to live or how your children are going to live or anything else. But both Charlie and I, we just enjoyed the fact that people trusted us, and they trusted us 60 years ago or 70 years ago in partnerships we had. And we never sought out professional investors to join our partnerships. Among all my partners, I never had a single institution. I never wanted an institution. I wanted people, and I didn't want people that were sitting around and having people present to them every 3 months and tell them what they wanted to hear and all that sort of thing. So, and that's what we got, and that's why we've got this group here today. So it's all worked out. But that it's you don't want to be patient when things are going your way. When the time comes to act, you want to get it done that day.
So if you've just finished watching the interview, or you're curious about how a billionaire thinks about timing, trust, and decision-making, This reaction and breakdown is for you. Let's start with the question the young man asked Warren. Has there ever been a situation in your investing career where breaking the principle of patience and acting fast has actually benefited you? That's a great question, because it touches on what makes Buffett's strategy so famous. He's always preaching long-term thinking, but here's where it gets interesting. Warren says yes, absolutely. There are moments when you must act fast. And that's exactly what he did in 1966. Buffett tells this amazing story of how he and his partner Charlie Munger were offered a business out of the blue. They got a call from someone representing a wealthy woman, Mrs. Annenberg, whose husband had passed away. Her late husband had been in business with one of Buffett's managers, Ben Rosner. Now Ben was nervous and uncomfortable working with his former partner's widow, and basically wanted out of the deal. He didn't want to deal with the tension anymore, even though the business was solid. Here's the deal they were offered. The business was selling for $6 million. It had $2 million in cash. It owned $2 million worth of real estate, and it was generating $2 million in profit every year before tax. That's wild. Think about it. They were being handed a cash-flowing business with built-in assets, practically for free. This wasn't just a good deal. This was a once-in-a-decade opportunity. And Buffett knew. This was not the time to be patient. This story is so powerful because Buffett flips the narrative. He says patience is critical, but not always. You don't want to be patient when someone's offering you something for $6 million that's worth much more. This is what he calls the occasional call. It's rare, it's random, but when it comes, you have to be ready, and you have to act immediately. There's no time for second-guessing or bureaucracy. You can't drag your feet. That's how you lose the deal. He literally says, you have to be willing to hang up after 5 seconds, and you have to be willing to say yes after 5 seconds. It's not about reckless decision-making. It's about being so prepared through years of reading, experience, and clarity, that when the right deal shows up, you just know. And you move. Then Buffett's partner Greg Abel jumps in, and this is another gem. He reminds us that patience is not passive. You're not just sitting around waiting for something good to happen. While Buffett and his team are being patient, they're constantly preparing, reading, analyzing businesses, studying trends, running numbers, so that when the right opportunity hits their desk, they can pull the trigger fast because the legwork has already been done. That's such a valuable lesson. Whether you're investing in stocks, starting a business, or just trying to level up in life, patience isn't about sitting on your hands. It's about actively preparing behind the scenes so that when the moment comes, you don't miss it. Another powerful moment in the interview is when Buffett reflects on why he still works at 90 years old, despite being richer than he could ever need. It's not about the money, it's about the trust. One of the great pleasures in this business, actually the great pleasure, is having people trust you. Buffett talks about how his early partners weren't institutions or firms. They were regular people, and they trusted him, and that's what still motivates him today. That right there is the heart of Buffett's legacy, not just being smart, but being honest, being trustworthy, and building a reputation where people know their money is safe with you. Let's wrap up the key lessons from what Warren Buffett shared. 1. Patience is powerful, but timing is everything. Be patient in waiting for great opportunities, but be decisive and swift when they appear. 2. Preparation turns patience into action. Don't waste your waiting period. Use that time to study, prepare, and sharpen your instincts. 3. The best deals don't come every day. Buffett waited for years for some of these golden opportunities. You only need a few great investments to change your life. 4. Trust is more valuable than money. In the long run, relationships and reputation matter more than chasing quick profits. 5. Don't overthink once you're ready. If you've done your homework, trust your judgment. Say yes when it counts. This interview really captures the dual nature of success. Long-term patience with short-term readiness. It's not just about waiting, and it's not just about jumping on everything. It's about knowing when to wait and knowing when to act. And the best part is, this isn't just for billionaires. This is something we can apply in our own lives, in how we invest, how we make career decisions, and even how we handle relationships. So, if you got value from this breakdown, hit that like button, drop your thoughts in the comments, and let me know what part of Buffett's mindset resonates with you the most. And don't forget to subscribe for more videos that break down the mindset of legends like Buffett, Munger, and beyond. Alright, let's dive into the best Warren Buffett stock to buy now and potentially get rich in a few years. The company I'm talking about is BYD, ticker symbol BYDDY. Ever heard of it? Don't worry if you haven't, you're about to. BYD stands for Build Your Dreams. And they're not just building dreams, they're building the future. BYD is a Chinese multinational conglomerate. They're involved in a wide range of industries. Think automobiles, battery electric vehicles, buses, trucks, forklifts, solar panels, rechargeable batteries, and even mobile phone components. They're a true powerhouse. But what sets BYD apart? Why is Warren Buffett betting big on this company? Let's dive into the details and see why BYD is poised to become a global leader. Warren Buffett is known for his value investing strategy. He doesn't chase hype. He invests in companies with strong fundamentals, solid track records, and immense growth potential. Sound familiar? That's BYD in a nutshell. Buffett's Berkshire Hathaway first invested in BYD back in 2008. They purchased a $225 million stake in the company. And boy, has that investment paid off. BYD's stock price has soared over the years. It's a testament to the company's vision, execution, and dominance in key sectors. But Buffett's investment isn't the only reason to be bullish on BYD. Let's talk about their market position. BYD is often mentioned in the same breath as Tesla, and for good reason. They're both major players in the EV market, but BYD is more than just an electric car company. They have a much broader portfolio. Remember I mentioned they're involved in solar panels, rechargeable batteries, and mobile phone components? This diversification gives them a significant edge in the market. They're not reliant on a single market. This makes them more resilient to economic downturns. Now let's talk about the elephant in the room, the electric vehicle market. The EV market is booming, and it's showing no signs of slowing down. With the increasing awareness of climate change and the urgent need to reduce carbon emissions, electric vehicles are becoming more popular than ever before. Governments worldwide are pushing for cleaner transportation. Policies and incentives are being introduced to encourage the adoption of electric vehicles. From tax breaks to subsidies, these measures are making it easier for consumers to make the switch. Consumers are demanding more sustainable options, they are becoming more conscious of their environmental footprint and are looking for ways to reduce it. Electric vehicles offer a viable solution, providing a cleaner and more efficient mode of transportation. And BYD is perfectly positioned to capitalize on this seismic shift. With a diverse range of electric vehicles from cars to buses to trucks, BYD is meeting the needs of various market segments. They're not just selling electric cars. BYD is a pioneer in the electric vehicle industry, offering a comprehensive suite of products that cater to different transportation needs. They're building electric buses, trucks, and even forklifts. This extensive product lineup allows BYD to serve a wide range of customers, from individual consumers to large corporations and public transportation systems. They're creating a complete ecosystem of electric mobility solutions. This holistic approach ensures that all aspects of transportation are covered, making it easier for societies to transition to electric mobility. But their real secret weapon is their battery technology. Batteries are the heart of any electric vehicle, and BYD's advancements in this area are setting them apart from the competition. BYD is a world leader in battery production. Their state-of-the-art facilities and innovative techniques ensure that they produce high-quality, reliable batteries that power their vehicles efficiently. They have a vertically integrated business model. This means that they control every aspect of the production process from the initial design to the final assembly. This means they control every step of the process. By managing everything in-house, BYD can ensure the highest standards of quality and efficiency, from raw material sourcing to battery manufacturing. This comprehensive control over the supply chain gives BYD a significant edge in the market. This gives them a significant cost advantage over their competitors. By reducing reliance on external suppliers, BYD can keep costs low and pass those savings on to their customers, making electric vehicles more accessible to everyone. As of 2024, BYD carries a market cap of $76.27 billion, with earnings per share sitting at an impressive $47.36. Its price-to-earnings ratio is just 2.10, signaling a significant undervaluation when compared to its intrinsic worth. The company generated a massive 777.10 billion Chinese yuan in revenue, with net income at 40.25 billion yuan, giving it a solid profit margin of 7.1%, a strong indicator of improving cost control as the business scales. It's also returning value to shareholders, albeit modestly, with a dividend yield of 0.86%. The return on equity sits at 8.4%, which is moderate but shows room for capital efficiency improvements. Leverage is comfortably managed with a debt-to-equity ratio of 0.83, placing BYD on stable financial footing. Now, onto recent developments. Positive momentum is clearly building. First, there was some confusion in the media about their investment activities in Chile. Earlier reports claimed BYD and their partner Tsingshan were pulling out. But the Chinese embassy in Chile stepped in to confirm the investment plans are still very much alive. That's a relief for investors focused on BYD's global strategy. Speaking of strategy, BYD has set its sights high. The company plans to sell half of all its vehicles outside of China by 2030, which shows just how serious they are about dominating the global EV market. Innovation is another pillar of their growth. Their latest advancement, the Super E platform, brings rapid charging technology to the table. This breakthrough has drawn serious attention from investors and sparked a rise in stock prices following its announcement. And the numbers don't lie. BYD sold over 370,000 vehicles in April alone, a major milestone that positions it strongly against heavyweights like Tesla. But the road ahead isn't without its bumps. 𝗗𝗚𝗨, a domestic competitor, has rolled out a new battery technology that could pose a serious challenge to BYD's position in the EV battery market. It's a competitive landscape, and BYD will need to stay agile and innovative to maintain its edge. Despite market volatility, the company's international ambitions, cutting-edge technology, and booming sales all point to a bright future. The fundamentals are strong, top-line growth is accelerating, profitability is expanding quickly, and financial integrity remains rock solid, with no red flags around accounting. They're not currently running a buyback program, which yields a steady rating on operational efficiency. But with a well-diversified revenue stream and a vertically integrated supply chain, BYD enjoys a moderate but resilient competitive moat. Overall, the numbers, strategy, and innovation combine to form a very attractive risk-return profile. For long-term investors looking to ride the EV wave, BYD might just be the hidden gem they've been waiting for. Now, are you ready to start investing like Warren Buffett? Imagine having the ability to spot opportunities in the stock market that others might overlook. Do you want to learn how to identify undervalued companies? Companies that have strong fundamentals but are trading below their intrinsic value? Companies like BYD that are poised for explosive growth? BYD, a leader in electric vehicles, is a prime example of a company with immense potential. Then I have something special for you, a comprehensive course that will transform the way you approach investing. I've created the Value Stocks Investing Master Course. This isn't just another course, it's a roadmap to financial success. This course is designed to teach you the ins and outs of value investing. You'll gain insights into the strategies used by top investors, no matter your experience level. Whether you're just starting out or have been investing for years, there's something here for you. Whether you're a beginner or a seasoned investor, this course will give you the tools and knowledge you need to succeed. This course will give you the tools and knowledge you need to succeed. You'll learn how to analyze financial statements, evaluate market trends. You'll learn how to analyze financial statements, evaluate market trends, and make informed investment decisions. You'll also discover how to build a diversified portfolio that can weather market volatility. Click the link in the description and pinned comment to learn more and enroll today. Don't miss out on this opportunity to elevate your investing game. Want even more stock tips, in-depth analysis, and real-time trade alerts? Then join the Stocks Galore community on Patreon. We provide our members with exclusive content. You won't find it anywhere else. Become a part of our growing community of like-minded investors. We share our insights, strategies, and analysis on a daily basis. Click the link in the description to join Stocks Galore on Patreon. So, what do you think about the future of electric vehicles? Is BYD the next Tesla? Let me know in the comments below. And don't forget to like, share, and subscribe to my channel for more investing insights. Catch you in the next one.